Happy Friday, good peoples. This is for my Patreons and a teaser for YouTube on what we're doing over in Patreon. I know, it's Friday the 13th. All right, guys, well, be safe regardless of what you're doing and how you spend the day. All right, let's talk about earnings because we're in the midst of earnings for the gold and silver miners. And as expected, they've been absolutely fantastic. Now, does that always correlate into a price increase? Absolutely not. I watched Newmont in the second quarter of 2025 go down 7% or so on their second quarter earnings. I gobbled it up like crazy. I sold puts. The better play would have been to go long calls, but so be it. I made money on that, and many of you bought the stock, still hold the stock, and you made money, and it's tons higher. That was in the 50s, guys. So I've owned the Nikio Eagle Mines, the company we're talking about here, for several years. They pay a decent dividend. Um, and that, by the way, is going up 12.5%. So the purpose of this video is not to really talk about the earnings necessarily. It's to use the current earnings, the current guidance, and some other things to project the price out, because that's what I try and do for my Patreon. So it's probably might be a surprise to you. It's not to my older Patreons. Whenever I've talked about Anikio Eagle Mines, I rate it as one of the best, if not the best, managed gold and silver mining company in the world. I think it's number two now, ahead of Barrick. I think Newmont is clearly the largest. I believe Anikio is number two, and Barrick is number three. Barrick had been number one, but Newmont's acquisitions have taken it to the top spot. And Anikio itself made an acquisition of Kirkland Lake Gold back in 2022, which was a very large company for them to acquire. So I absolutely loved the setup here. And ironically, with fantastic earnings, the stock went down, but it had nothing really to do with the earning. It had to do with the assumption that metals were down because the dollar was up. And those are typically inverse correlations. It doesn't always spell true. I've seen 2 and 3 month segments where they both run together or both drop together. But yes, the normal take is that as the dollar goes up, gold and silver go down, the precious metals. And as they go down, the dollar or the metals go up. And that holds more true than not. So there was some talk that Russia was going to buy some oil and they would buy in US dollars. So let's stick to that. I don't know if they were going to say they were going to sell some in US dollars. I'm not sure what that motivation would be, but that strengthened the dollar and knocked the metals down. Had nothing to do with AEM's earning. When you see setups like that, you pretty much have to buy. Now, that doesn't mean that the dollar doesn't run a little bit higher and gold and silver go down a little bit more, but it was really taken aback. When you stop looking at fundamentals, then something is seriously wrong. And we're seeing that in the markets. We've seen, a 13-year plus run in the Nasdaq, in the S&P. They're extremely toppy. I put out a lot of videos for my patrons. They know what I'm referring to with ratio charts. All right, guys, so let's jump into Anikio. And Doug, shout out to you for posting, one of my Patreon members. He posted sort of the complete earnings on Anikio. I don't typically do that, um, but I like to make a specialized video out of this because people can just go out and Google those and find them. But hey, kudos, Doug, for sharing with the group. Always appreciated. Um, this is a deep dive into where could the price go, and I call it AEM forecast, right? I've been telling my Patreons that I anticipate it running to 1,000. Well, 1,000 seemed high. I think when I first said that it was around 170 back in September, October. I don't remember the particular date. I mean, I'm in this 2 years ago at under $50 to give you an idea. So it's a four bagger for me. And I think it's got a five bagger more to run. So I'll be close to a 10 bagger by the time it's said and done from one of the best managed, largest gold and silver miners in the world. So I have spec bets that I see 10, 15 times opportunity, but rarely do you see a 5x opportunity. Could be more, could be less on such a fantastic company. So you can see here, I'm just going to highlight a couple of things. So here's their 3 months it ended December 31st. So these miners in February are reporting for the last quarter of last year, October, November, and December. So that's why you see 3 months ending. So quarter over quarter, what was the realized gold price? Well, as I had been saying, guys, when you're in the fourth quarter and we had 4,200 gold often during that quarter, we then had as high as 5,600 in the first quarter. And now we're back around the 5,000 mark. So you're going to see a quarter in quarter one even way better than you've seen here in the fourth quarter. And that's what's happened progressively. I don't see any change to that. Um, I see it only going up. So I'll get into some of my price projection. So so that's 56% higher gold price realized per ounce than the fourth quarter of 2024. Is that even right? Yeah, that's right. Okay. So how about net income? Remember I talk about on the miners, they sell it at a certain price and that say gold goes from I'll make up the number 4,000 to 5,000. That's a 25% increase in the price of gold. But if you're digging it out of the ground for 2,000 and gold went from 4,000 to 5,000, your earnings went from 2,000 to 3,000. So it's a geometric ratio. You increased earnings 50%, but gold only went up 25%. That's why I talk about leverage, guys. So you're seeing almost threefold, right? This was 200%. That's a three, this would need to be 1527 and you would have 300% or a 3x gain, which is only 199. Math can confuse you at times, right? So 100% gain can be 2x. Something goes from 10 to 20. It's only 100% increase. Okay. 630, 113. Look at these adjusted net income. EBITDA, right? Which means earnings before interest, taxes, depreciation, and amortization. EBITDA and adjusted EBITDA are non-GAAP measures that are not standardized financial measures under IRSF. Yeah, sorry, IFRS accounting standards. So depending, FASB and other rules with that, just understand that they're all, you'd have to be an accountant or a major in accounting to fully understand it. But I like to speak simple terms here, not try and confuse people or showboat that I may know some term or something. It makes little, right? Keep it if you can know all of the sophisticated stuff and can explain it to common people, then you're not very smart at all. And I've seen many like that. So bottom line everywhere, capital expenditures, right? Now they went up 66%. There are some exceptions. There's some numbers noted on the earnings if you want to look at that. Look at free cash flow, which is what I've been harping on. That is 130% from 570 million to 1,310. Amazing, to a billion. Free cash before changes in non-cash working capital balances. So there's always things. Read the earnings for that. How about net income per share, basic net income? Again, triple from $1 to $3, right? But from 1 to 3 is a 200% gain. Adjusted net income per share, again, basic, right? Cash provided by operating. So it doesn't get much better than this, but it will get better than this. The next quarter is pretty much a shoe-in. We'd have to drop to 3,900 goal and stay there for the rest of the quarter just to equate what we did in the fourth quarter, which would then blow out first quarter 2026 over 2025, right? Remember, these prices were nowhere near. We've gone up so high. And I expect 6,000 gold in 2026. I'll give you a lot of the things that I'm looking for, guys. What people don't realize, and I talk about this if you watch my videos lately, my Patreons are probably tired of hearing this. Think about when people ask me what my targets are when I identified the commodity super cycle, started my Patreon in August. And I got to tell you, those that came in are up 100, 150, 200, 250% on various miners. Some I've given out that were up 100% in 3 weeks. Now they may retrace back 30% and you're only up 70%, but it's been outstanding, people, to say the least. The best performance I've had in my account since the last commodity super cycle. I've had some good years, but nothing as good as I had in 2025, and I fully expect 2026 will beat that. All right. Again, increase their dividend. That's no small feat, 12.5%. Again, it doesn't compare to some huge ETF where you're just drawn in, right? If you go over to yield loss, they got a lot of ETFs paying you 60, 70%, but your NAV is killing you, right? You have a total return of negative. So this is just a pure payment going up 12.5%. Nice. All right. So let's look at what could this stock do. By the way, let me just remind you. So it closed at 205, I think 21. Yeah, I made a mistake when I typed 32. Okay. Down 5.52% because gold and silver went down because of some of what Russia said, right? How silly in the scheme of things. But that's the nature of the market, right? You find something, you identify it, and when you get economic mismatches, you take advantage of it. For those of you that don't understand capital rotation and then even sector rotation within that. So we're in a commodity super cycle. How do you identify that? Real things start to move. The general stock market, the S&P, the Russell 2000, the Dow, they can all do okay, but they typically underperform while commodities overperform. I mean, grossly overperform. So I've shown charts to my Patreons of gold breaking out against the S&P, silver breaking out against the S&P. So they greatly outperform that. So you may go from 15% a year with dividends reinvested in the S&P to maybe 1 or 2% over a period of time, next 5, 6, 8 years. So it's an underperformance in one asset class simply because of capital rotation. The velocity of money moves and it moves quickly, and these assets perform. And then, even within that category, it's like buying pharmaceutical companies. And 1 minute you're buying for this kind of disease, and another in this one. The same thing happens here. Gold moves, silver moves, copper moves, platinum and palladium move typically with silver. Platinum right now is probably the most undervalued metal, precious metal that exists. Typically, 80% of the time it's higher than gold. Think back if you're older like I am and you bought, a wedding band or something for your wife, or your wife bought one for the husband. If it's platinum, you paid more than you would have paid for gold. Well, that's not true now. Platinum is less than half the price of gold. But that will change. If I see gold going to 15,000, what does that tell you about platinum as it plays catch up? We already saw it in silver. Most people thought I was crazy when I had a target price of 250 silver when it was still $30 and I started my Patreon. Well, they didn't think it was so crazy and we ran to 120. Sure, we're back to 76, 77 now, right? But I think this year we go back to 150 to 180 in 2026. So my target's around 350 now. For gold, it's around 15,000. And what I started this thing to tell you guys is this: I wanted you to think about how 15,000, and again, my patrons have heard this so much, how 15,000 seems crazy high. But I want you, it's like you can't eat an elephant in one meal, right? You just got to take a bite at a time. Not that you want to eat an elephant, right? I don't even know if anybody eats elephant at all. I've had buffalo, I've had quail, I've had, game type things. The first time I had venison when I was much, much younger. Different taste, but there isn't many that I didn't like. Um, but here, it's a whole different take. So when gold is 5,000 and we talk about 10,000, sounds like this pretty crazy number. When we're 2,000 gold and we talk about 10, it's inconceivable. What must the world be like to be at 10,000 gold? Well, it wasn't that long ago, a couple of years ago, that we were at 2,000 gold, guys. We hit 5,600 in January. We're 5,000 now. So I want you to think about the rise from 2,000 to 5,000. That was like 150% increase. But all of a sudden at 5,000, it would only take 150% increase, right? So 5,000 would become 10,000, and then the 50% would get us to 12,500. So think about that. We need another 150% increase. We just had it in 2 years, and I'll give it 4 years. So then we're at 12,500. So it's not so crazy. And here's the other thing. How do we think about pricing? We always think about it in our local currency. So for an American, we think about it in the dollar. If you're Canadian, you think about it in the Canadian dollar. If you're Aussie, you think about it in the Aussie dollar, right? If you're in the UK, you think about it in pounds. If you're in a lot of the European nation countries, you think about it in the euro. So I get it. It's always thought of in the local currency, but guess what? Regardless, what is the common denominator in all paper currencies over time? They all lose value. It's called inflation. My favorite is NAV erosion, right? Because I've seen yield loss in some of these other companies. Speaking of yield loss, have you seen what their assets under management? They're like 60% down. Well, when you tell people and you imply certain levels of performance and you're paying influencers and your fanboys and bringing them back for steak dinners, and they haven't been in the market to know any better. They're just trying to carve a living out. I'm not making excuses for them, but you guys are out there listening. A lot of you have told me, and you're sorry you did that. So listen to somebody that's got some experience, that's got little gray hair, that's maybe 30, 40 years in the market, been beat down, been kicked, learned a lot of lessons the hard way. And then you have a much better chance for having success. All these people run out, retire on Misty, retire on Ulti, right? Ulti to the moon. And they got no money. They're not invested in it. And even if they were, it would be a small amount of money because they're not in life yet where they have a lot of wealth. And yet they're advising you guys what to do. and they're getting their steak dinner and they're getting flown there, and then later they're being paid. Well, guess what? A lot of those influencers are doing? They're moving to the newer companies right now that are going to be paying them. So then it makes it, it's one thing when they say it. This is a paid promotion. This video is brought to you by Surfshark, right? A VPN. At least you know that they're being paid. Well, a lot of these people weren't really openly admitting that. Whether it in fact happened, you'd have to ask them. I suspect it was for a period of time. So I say kudos on the comeuppance to title and to yield loss. And there's a few other ones out there that aren't doing very well, that have some of the same options people doing their options as yield max, yield loss did, right? So I'm not here to beat up people. I'm just here to help you guys and point out, be careful, right? The stock market be like a ticking bomb. You don't know when you own something that is going to blow up. Like I said, we're very toppy in the stock market. Does that mean it couldn't run for another year or another 3 months or another month, or it can't crash in a month or 3 months in a year? Much closer to a crash than it is to, a triple or a quadruple from here. So come over and join the commodity super cycle. Listen to somebody that's been through it, who's studied history, who understands the markets. Okay, instead of somebody who's young and just telling you or telling you, hey, and I'm not saying crypto doesn't recover and move up, but how many young people have been sold the crypto game that it's never going to go down? It's just going to go to the moon. Well, wake up. You're seeing that in MicroStrategy. You're seeing some of the other. Maybe it's getting close to a bottom here and we're going to rise again. I'm not anti crypto at all. I'm just telling you, be careful whatever you do. Okay. So this sheet, let me get this sheet is an attempt to price AEM, Anikio Eagle Mines, one of the very best managed gold miners in the world, and some silver. So what are my assumptions? Well, the core driver and any mining company typically is the margin per ounce. It's not the only driver, but it's a core piece. So there's a term in the industry called AISC, all-in sustaining cost. So for a senior producer, and I say senior because they're either number 2 or number 3, Newmont is the largest gold and silver mining company in the world. I believe AEM is 2 and Barrick is 3, but they switch sometimes. So take that with a grain of salt. They're very large. They're in the the top 10, the top 8, the top 3 for sure. All right. So operating margin equals the gold price minus all-in sustaining cost. So if gold's 6,000 and your all-in sustaining cost is 1,400, then your gross margin is 4,600. So I've long felt that AEM could be a five-bagger, and that takes the 205.21 current price, close on February 12th, to over 1,000 plus. So I said, you know what? I need to prove it. Let me give you every possible number that an analyst could look at and then some more to show how we get there multiple ways. So today AEM is saying their guidance is 3.3 to 3.6 million ounces a year. The range depending on expansions. What are my assumptions? They get possibly a small acquisition. I don't think they're looking to merge or acquire a large gold and silver miner. I do think it's possible that they pick up a small or one or two companies that maybe takes them from 3.6 to 4 or 4.2 or something. Also, they own a number of mines where there's drilling going on. So those land packages of XYZ that they bought or another one, then they continue to drill on those and they find additional mineralization, which increases their their production eventually. So I'm saying gradual growth, no large drilling success or large acquisition. Sorry about that, guys. My fingers are faster than they should be. Okay. So what's a reasonable path? What might it look like? Well, let's go with the 3.6 that they're already, it's the higher end of what they're showing, but that's fair. What if it's 3.3? I'll say 3.6. 2026. 2027, I'll go 3.7, 3.8, 3.9, 4, 4.1. They're never going to go exactly like that, but they might go 3.6, 3.6, 4.0, right? They make a small acquisition. So one way or another, I want to show some growth. So I got them at a high of 4.1 on 2031. And then I even used 4 later to not even go that. So the gold price rise. Guys, in order to get to my 1,000 number, it pretty much means that gold cannot, for the most part, stay at 5,000. If it stays, I do a scenario where it stays at 5,000 for 4 to 5 years. Okay, so costs likely will inflate. Labor costs will likely rise. Diesel will rise. That's part of the commodity super cycle. For you guys that are on YouTube watching this, especially first timers, I talk about sector and capital rotation in Patreon all the time, and I line up my people. It's hard when gold and silver are flying, and I'm telling them to take profits because I anticipate a a sell-off to get them to go into the other categories that haven't moved yet. But some of them listen, and those same ones that listen are already up substantially in those other commodity sectors, and they will perform very, very well in 2026. Not to say that our prize, the gold and silver miners, won't, and the platinum and palladium and the copper. Okay. So, royalties, typically companies pay royalties to governments and so forth. That'll continue. So, what's an example AISC path? Escalating prices. Well, their prices were, depending on which numbers in that earnings you looked at, fourth quarter was like 1,300, but I think the average was closer to 1,400 for the year. So let's say it's 1,450 in 2026. We'll have a better indication when we see first quarter in May when those earnings come out 3 months from now. 2027, I got it going to 1,550. You see, 100 every month. And then I go from 2030 to 2031 to 2000, 1,850. Okay. So we go from 1,450 to 2,000. Later on, I'm going to assume 5,000 gold, but I'm going to stick the cost at 1,800 for ASIC for all of those 5 years. All right. So I play with different strategies. Estimated cash flow. Pre-tax free cash flow equals gold minus all-in sustaining cost times the number of ounces that you produced, right? And sold. Remember, production and sales aren't always equal. So, example for 2031, 15,000 gold minus 2,000 ASIC will give them a gross 13,000 per ounce profit times 4.1 million. So that would equal 53 billion operating cash generation. Well, let's leave that for now, and we'll use some of those to tell you per share and what it could be, but we'll get to that. So next, let's look at what multiple will the market assign. What do I mean by multiple? It's price earnings ratio. So how does Wall Street determine that? A lot of different things, but a big part of it is A, how sustainable are those earnings? How are the earnings derived? One of gold and silver's problem, as the metals escalate, then they say, hey, I want to use, 5,000 gold because that's where we are. Well, the analysts and sometimes the market says, yeah, but that's unreasonable. This thing may go back to 2,000. We feel more comfortable at using 2,000 gold. So they use 2,000 gold. and then they assign a higher multiple. But the reality is, it's a very low multiple when you consider they're producing and selling gold at 5,000. And I have much higher targets going forward. So it makes these miners today rated much, much lower than they should be. If you look at 2011, the last peak in gold, we ran up into the 1900s, 1920, 1930 or so in the year 2011. And you look at the GDX, which is gold and silver mine. What did the valuation of GDX reach? And you divide it by gold. Well, that valuation is 2.34 times higher in 2011 than it is currently. And guess what? GDX was GDX and gold was 1920. Gold is now 5,000, has been 5,600 for part of January, or actually one day in January. But it's been well over 5,000 for a lot of January and been under it for a little bit. If I had to have an average, it's probably like 4,800 for the month of January. Here we are in February. We're probably averaging 4,600, 4,700 gold so far. So that's going to be when they sold gold last quarter for 4,100. If we just stayed where we are, 48 to 5, we're going to have an average of 4,600. Think about that. That's another 25% increase in your sales price, and your cost didn't go up hardly. So large miners at extreme metal prices often reduce multiples because they assume peak condition not likely to last, exactly what I was talking about. So typically they trade at 6x to 12x cash. Well, you've got Mag 7 companies at 20 and 22, some of their multiple. So you tell me, but that's always a sign that the top is coming. So maybe in 2031, that is in fact our top. If we go to 15 gold and we get these high multiples, and everybody is bullish because you know how many of you people in retail are going to come in? By that time, you're going to be listening to your Uber driver, your neighbor, your cousin, and they're all going to be telling you gold's going to 50 or 100,000. And you're going to think 12 and 13,000 super cheap. You're going to pile in like retail always does in the eighth and ninth inning, only to see it go down 30, 40, 50%. So I say to you guys, we're in the fourth inning, get on board. Don't pile in at the end. Don't buy Misty at 40 or 35 like a lot of you did. So maybe in the bull markets we reach 10 to 15x. We certainly could. I'll give you some examples. So let's translate this speak to market cap equals share price because I've been talking about multiples, right? But if I don't cover this at a fairly deep level, some of the people will get confused that understand this. For a lot of you, it's over your head. So just kind of pay a little bit of attention and then see what I come up with. So after adjustments, free cash flow. So we suppose in 2031, it's 40 billion. So a 12x multiple gives you 480 billion. Your share outstanding is 500 million. So your stock's at 960. So we didn't talk about the gold price, but we will. So it could go there, but a lot has to go right. So what would kill the 1000 scenario? Production disappoints, right? They stop producing at the same level. Maybe they have some production problems and they don't attend to them and they don't fix them. Maybe they have one of their 15 or 17 mines go down for a month or two. Of course, that wouldn't be a major, right? If you're 1/17th in it and it shut down for, a month and a half. How about cost inflation worse than expected? That certainly can happen. How about more windfall taxes? Those things can happen. How about if they make a bad acquisition? Well, first off, in my opinion, this is the best management team there is in any gold and silver miner in the world. So I think that's negligible. That's probably, in my opinion, less than 1% chance. They've already assimilated excellently a huge acquisition in 2022 of Kirkland Lake Gold, which in itself was a phenomenal growth company. It was a company that was average for years in Australia. And a particular geologist was speaking to Eric Sprott, who was a big billionaire in Canada and owns many, many gold and silver mining companies, and was talking to this geologist. And the geologist shared with him, based on the rock formations and the geology, and something a geologist would say, said, "You're not going deep enough. There's a greater than 70% chance that the mineralization, the grams per ton, goes up tremendously if you just go deeper." Well, people don't like to drill deeper. They don't like to look. They had a decent amount of gold, but the mineralization wasn't off the charts. So that's exactly what they did. And they found what is one of the largest concentrations of gold or gold mines in the world. So that was a key tip off. And it happens sometimes. So the market assigns low multiples due to peak earnings. That could certainly happen. I think that takes care of itself. We're already at very low multiples. I think they have nowhere to go but go up. So what could make it even higher than 1,000? Maybe I'm sandbagging. Well, how about a multiple expansion, which I'm fully counting on? How about they discover something large? Certainly could happen, guys. Oops. Yeah, there we go. Certainly could happen. But I was trying to be conservative. How about major share buybacks? They're already increasing the dividend. They could certainly not reduce that, a couple quarters out or next year, and simply just do more buybacks. That reduces the share count, which increases the multiple. How about gold remonetization environment? That's certainly something that's been talked about and could easily happen. My 15 number might be low in that case, 15,000. So let's take a price and rating multiple from conservative to high. So how about the first case is conservative. Gold in 2031, it's only 8,000. What's the multiple? 8x. Strong bull market. Gold gets to 12,000, has a 10x multiple. And then our third case would be a monetary crisis. Well, guys, I think we're in a monetary crisis if you want to know the truth. That's why I see 15,000 gold. 12 to 15x multiple. Where are we now? Guys, we're at 5,000 gold. They reported 4,100 for their fourth quarter. Like I said, this next first quarter should be 45 to 4,600 average gold sales. So assumption, we stay flat, gold for 4 to 5 years. We stay at 5,000 gold. They're going to produce 4 million. That's up from 3.6, but let's say over that next 4 to 5 years, they average 4 million. Their ASIC stays at 1,800. Certainly not that now, right? It's more like 1,400 now. Let's say the shares stay the same. They don't do any acquisition. They're not adding ounces to production. They don't buy back a lot of shares. They don't change much. So we're going to look at that scenario, then 4 more scenarios. So how about 5,000 gold? So margin 5,000 minus 1,800 ASIC at 3,200. Cash flow 12.8 billion. All right. So we're just using those numbers for now. We haven't translated into share price. We will. How about a multiple scenario? So let's take a look at 12.8 billion. Well, an 8x multiple gives you 205. Well, guess what the price is right now? 205. Now, if it gets an increased multiple, it may not if gold stays at 5,000. 256. 12x 307. 15x 384. So you see how powerful a multiple expansion. 7,000 gold margin. 5,200. 7,000 minus 1,800. Remember, we're keeping ASIC, which is certainly that's $400 more than it's been. Well, the cash flow is now 20.8 billion from 12. That's like 2/3, 8/12, 66.7% increase in gross revenue. So our 8x at 7,000 gold gets us this target price of 333. But if at 7, which is what I interpret it's going to take for the multiple expansion, then all of a sudden at 7,000 gold, we could be 416. Well, guys, if you can do math, 205 to 416, that's over 100% increase. I think it's a slam dunk we see 7,000 in 2027. Could happen in 2026. I doubt it. But again, guys, I want you to think about it. I see 6,000 this year. We've been 5,600. At 6,000, do you know what the increase percentage of gold has to be to go to 7? 16%. So gold price needs to go up 16% from 6,000 to be at 7,000. Based on where I see the dollar going, I think that easily happens. Just thought I'd share that with you guys. Okay. So look at this. Well, it's not the same. 7,000 gold. I don't think we go to 15. We probably jump between 10 and 12. So we're probably $450 in 2027 just based on 7,000 gold. Now, this is a large cap company. This is not a company that's going to go up 30 times, guys. This is closer to being an NVIDIA. This is well, not in market cap, right? Market cap on NVIDIA is 4.5 trillion. These guys are about 80 billion. But a 5x takes them to 400 billion. But they're not a tech company, right? Wall Street doesn't love them like they love NVIDIA. But then again, do you think NVIDIA is going to triple? I think they'll be lucky to hang on to what they've got. Not saying it's not a great company. It's been a fantastic company. But it's just sky high. It's priced to perfection. And it's predominantly hardware. People are going to continue, the competition is going to continue to come at them and try to knock off their technology. Yeah, they got a lead, but it's not that dominating. It's very hard to maintain hardware margins, even when you're the leader, by far, as they are. All right. 10,000 gold. Now we're starting to talk. And I guarantee you, if this moves to 8, it's probably 12x here. People are starting to say, wait a minute, we're at 10,000. I think we can use 5,000 gold now to measure these things. But when it was 5,000, they were using 28 to 32. So at 10, they may be using 6. That's why these multiples go up, guys. 32.8 billion. It's another 60% gain. If it was 35, well, at 30, yeah, 10,000 not quite that. It's 3/7. But look at the cash flow. Remember what I said? It's not, that's the foolery, the tomfoolery. You look at gold and you see 7,000. You look at gold and you see 10,000. Well, anybody that can do basic math says that's 3,000, 3/7. in the 40s, right? It would take 3.5 to equal 50. So it went up 40, but look at the earnings. They went from 20.8 to 32.8. Why? Because there's a geometric progression, guys. They have what is known as leverage. The miners should go up in time 2 to 2.5 times what the metal price. They have not been doing that. They will do that. Always like this until it's not. So you see 12 on 20, you only need 10.4. And we've got 12. So we're at a 60% increase in our gross on a 40% increase in the metal price. Again, leverage. Okay. And how about this? At 10,000, we may well be at 12x. So that little 205 is almost a four bagger, guys. And this probably happens in 2028. So you're not buying some little tiny miner that's hoping to strike it rich. You're buying a big cap stock. So when I talk about allocation, guys, in my Patreon, when you guys come over and join, you want a substantially higher percentage of your big, large cap than you do my speculative bets, even though there's some 10, 15, and 20 baggers in the speculative bet. But you want to throw a little bit of capital across many of them and more big capital at the big guys. So come over and learn. It's what I do, it's how I try to help people. All right, 15,000 gold. May sound really high. It's a triple from here. Well, think about the gold in August. Sorry, silver in August was $40. Maybe even into September. I don't remember the exact. Okay. And if somebody said it's going to triple, you wouldn't have believed it. All of the half the people that I told it was going to go into triple digits said no, it's going to crash at 50. Finally, I said, trust me. And many did, and many saw it. But it's hard to fathom when the last two times it went to 50 and it crashed. But think about an inflation adjusted price. Their 1980 setup, which we're more rhyming now than any other time. So the rhythmic cycle of what we're doing now matches the 1970 to 1980 bull market in gold and silver more than it does the 2001 to 2011. So your margin is 13,200 on 15,000 gold. Look at that cash flow. 52.8. Again, more than a 50% increase, right? We need 16 to be 50%, and we just went up 20. And gold went up 50%. So we continue to have that leverage. Look at those prices, guys. At 15, I pretty much guarantee you're at a 12x multiple. But maybe something else isn't quite as good. Maybe their costs go up higher. So can you see how 1,000 doesn't seem so egregious, right? Very, very doable. But when I've been saying it to people on something that I bought for $50, you can buy it at 205 and ride it to 1,000. But are you going to know when we have a 50% pullback in the metals? Saying, hey, I don't need to join this Patreon. He just told me to buy the stock and where it's going. But most of you get shaken off. It's like riding a bull. All you have to do is stay on for 8 seconds. You finish the ride. Not many do. Same thing happens here. A lot of you that buy at 205 when it gets to 550 or 600, you're taking your profit. Then when it drops to 400, 350, you don't want any part of it. Maybe even goes from 600 to 300. Some of the bull markets experience a 50% haircut in the miners. The person that bought it at 200 watched it go to 600. When it goes back to 300, they're out. They're saying, I'm getting out while I've still got a profit. And then it goes to 1,000 or 1,200. So that's why I have a Patreon. That's why I continue to talk about the setups, where we are, when we're likely to retrace, how deep can the retraces be? Do you have your allocations correct, guys? This is, if it was easy, everyone would do it. It's never easy. How many of you got into Tesla and rode it from 100 to 400 and back to 100? So you have to trim and you have to take some profits along the way. But you don't have to get out of your position unless we see a setup. And even then, identify the setup. If it's at 600 and it's going back to 300, it's got to go down to 500. How does it go down? Does it violently go to 500? Is there something different in its makeup? Then I'm out. And that's what we do. We look at that, or we simply buy a hedge. So I talk about all those things. All right. So let's do this final. Let's wrap this up. So this is our last look. So markets are skeptical that the price sticks regardless of overwhelming evidence. So this happens at higher gold. I think 7,000 whenever we hit that. Again, I try not to predict an exact time. It's an impossible goal, guys. I wish I could pick the tops and the bottoms. Probably wouldn't tell anybody, and I'd become the richest person in the world. Nobody can do that, of course, in anything. So if gold lives above 5,000 for a couple of years, institutions will model higher normalized earnings, which means higher multiples. So this whole re-rating I speak of can be 50 to 150% by itself. It's commonplace. Look at what's happened for the AI stocks, deservedly or not, and the Mag 7. They're about as multiple enriched as they're ever going to be. And that's why we're very likely. All things happen. Have you ever noticed that when the market surges and surges and surges, and then what happens? You know, you had Misty for a long time, a MicroStrategy high yield dividend income fund. Then 2 or 3 or 4 launched. Well, usually about the time the extra ones launch and everybody ends on it, that's a high in the market. It almost always happens, guys. So the Mag 7 are stretched like I've never seen it. The stock market in general is stretched like I've never seen it. So finally, a last look. Margin record highs. Defaults in car loans and homes are at record levels. It's not a pleasant environment. So this last look, let's do some base assumption. So production stays at 4 million ounces. ASIC stays at 1,800, which is, a substantial increase from current. Shares stay at 500, so no big purchases. Here's a heat map, I call it, estimated share price. So gold at various levels, 8x multiple, which is what we're at. This is where we are right now. Gold's at roughly 5,000. We got an 8.5 multiple, and the price is 205. So a 10x multiple, I doubt that happens. Takes us to 256, 307, and 384. There's not much incentive for Wall Street to change that. But at 7,000 gold, they likely will begin to re-rate. So that alone, even at an 8x multiple, is 333, then 416, right? So you're probably here at the 416. 9, probably not a big change, but look at that. 7 to 9, 2/7. Let's do the math on that. 28% in the gold price. See, doesn't sound so high when you look at that, guys. 7,000 to 9,000. You get a 28% gold price increase. You're still at the 416. You go to 576. Guys, it's like a 45% increase in your underlying share price. Let alone if you do options. Guys, I have an options tier. It came out of training students in options. I get asked a lot for that. If at the end of this presentation you see my email, if you're interested, just ask me some questions in general. Okay. You don't have to just immediately join Patreon. Just say, you're doing Patreon. What else do you do? How can you help me? Here's my situation now. Have a private consultation one-on-one. Look at 10,000, which we get probably re-rated again. But I'm just assuming the 10x. So I can get there with one simple re-rate at an ASIC of 18,000 and 1,800, and 15,000 gold gets me to 1,056. Very likely we're in this category by then. So now we're talking a six-bagger, guys, which is about as extreme as I think it gets. Certain things have to happen along the way. So if you like this analysis that I do, this is just a teaser for you guys. Obviously, I want to grow I've already got sunken cost into my Patreon. So if I make a video and I share it with, 300 paid members versus 1,000, other than some infrastructure changes I've been making, it all can happen. So I want to help more people. I don't need the money. Actually, it takes some of the trading time away. That makes it easier. If I really was in my 30s and I really had to have great earnings, maybe that's why some of the YouTubers do what they do, guys. They're just focused on growing. They'll do anything to get more viewers and subscribers if it includes misrepresenting the funds. I just can't do that. I can't live with myself. And guys, look, I tell you what has to happen. I can't tell you this is absolutely going to happen, but it's very similar to what happens in these commodity super cycles. It's not that big of a stretch at all. It just has to happen. That's why I started my Patreon. I told people 2 years ago in GDXY that I thought that was a great fund potential because it was in gold. And when we woke up in the commodity super cycle, it may be one of the best funds. Well, little did I know how poor the average YieldMax fund did. But after doing the forensic accounting for 3, 4, 5 months on many of the funds, I realized they just can't capture enough of the upside. Hence, their NAV erosion, right? Their yield loss name. So that's the problem. They're still only capturing 17 to 20% of the upside. They're still under $20 on GDXY. And the fund launched at 20. And GDX last year was up 150, 165% on the year. And what? They moved from 14 to 16. Whoopee. So that's not where you want your money. I just did a video last night comparing income funds. Guys, if you need income, I have a lot of income recommendations across the commodity super cycle and more coming. And I compare and contrast just like I've done on the round hills and the yield maxes and the neoses and the curves. Okay. It's what I do. I do a lot of analysis. If it doesn't show you, I know what I'm talking about here. So from percentages for large cap, mid cap, and also the speculative but larger upside, smaller developers and explorers. How do you know how to allocate? How do you even know which one to pick if you're not listening to somebody that has analyst skills to go out and look at these companies? There's some CEOs that are liars that have a hole in the ground and they put silver in their name and people buy them and they run up 200 and 300% only to crash because they never had any mineralization in the ground at all. So I separate the wheat from the chaff. I go through, I analyze these things. I've got a database of 860 plus gold and silver miners. I have 1 day performance, 1 week, 1 month, 3 months, 6 months, 12 months. And I constantly scrub that and I look and I recommend new ones as we go. But I make sure that the management team is legit. They're not those fake CEOs that are lifestyle companies that they just dilute and constantly raise capital, and him and his buddies on the board spend the money. And every commodity super cycle, they do the same thing again. But people can't follow them close enough because they keep changing names, right? It's always a different name. So if you want to start to make the kind of gains that only happen selectively in the markets, like now, we're likely in the fourth inning of this 9 inning game. So not too late to get started. Okay, you see my Patreon, been growing like a weed. Patreon.com/TWC100. Questions, you can send it to my long-standing Bruce2500 at Gmail. It's the first one I check. I've added, right? No plan to build a website, but I do want to have a professional looking. So there's a Bruce at targetedwealthcreation.com. So I've secured that domain name. More to come on that in the future. Right now, I live in Patreon. Okay, that's where my top content, my loyalty, the community we've built, very strong there. It's growing, but I'm always welcome new people. So if you have a simple question, fire me an email. If you think you need a consultation before you do anything, those are available. Just email me and ask, okay? It really either email, but I probably notice still my Bruce 2500 more often. All right, guys, I'm going to let you go. Hopefully this was helpful. I know my patrons will love this because this is the kind of data that gets them excited. They're already owning it because it's on my recommended list, okay? But this is a reminder how it can get there and why it likely will get there. So for you guys that are watching on the outside, this is just one little speck of what I do. All right, guys, I'll let you go. Have a great Friday ahead. Remember, it's Friday the 13th. Be careful. All right, bye now.